Hello there everyone, lots to talk about today. It's the autumn budget, if you will, the new Chancellor's announcement. Specifically, to give it its proper title, it's the Growth Plan 2022. That's what it's badged up as. Now, it's, It's 10:30. The Chancellor's not long sat down. What I've done is I've gone through the Treasury report on HMRC Treasury's website, because that's where all the detail is. So I've gone through there, blitzed through that. I wanted to get this video out there as fast as I can and just to give you some highlights of what was in there. And it's quite exciting stuff, considering it was going to be a mini fiscal event. There was so much stuff in there, more so than in several recent major budgets. Anyway, listen, let's get cracking with this. So, first one, reversal of the social care levy. The social care levy was just a fancy name to basically say national insurance hike announced last year, which is in right now, 1.25%. The new Chancellor said we're going to reverse that. So that will be reversed from November. So that 1.25% in national insurance will be rescinded, and it will also apply to dividends as well as salaries. So great for SME businesses. You're paying yourself as an owner manager of your own business. You're paying yourself dividends. Right now you're feeling that extra pinch, 1.25% extra tax. That's coming off. Terrific news. Next one, cancellation of the proposed increase in corporation tax. So from next year, the headline rate of corporation tax was going to jump to 25% for profits of a certain level. The Chancellor today said, look, we're not going to do that. We're going to keep it at 19%. So corporation tax staying at 19%. Again, terrific news. Next one, SDLT threshold. So the point at which you have to pay stamp duty land tax when you buy a property will be increased to £250,000 from today. So property purchases from today, 250 grand is the starting point for paying any SDLT. It was 125, so that threshold has doubled, which is great news for people buying properties. Speaking of people buying properties, those getting on the property ladder for the first time buyers, they had a separate relief for stamp duty land tax, even more generous. That basically said already that they could, £300,000 was before that the exemption before they started paying stamp duty land tax as first time buyers. That has gone up to 425,000. So if you are buying a property and you've bought in the past, you don't pay SDLT now until 250,000. If you're a first-time buyer, you don't pay any SDLT until 425 grand. Terrific. So, next one, income tax cut. Who doesn't like a good income tax cut? This was all mooted by previous individuals in the Tory leadership race saying, yeah, we're going to do this at the back end of the Parliament. New Chancellor's gone one further than that. He said, look, we're going to bring this in from April next year. So only 6 months' time, there or thereabouts, the basic rate of income tax will drop from 20% to 19%. April 2023. And then the so-called higher rate of income tax, which has been in for around about a dozen years, that's for earnings above 150 grand. Once you start earning above 150,000, the tax rate jumps from 40% to 45%. That 45% will be abolished. So that is going to go. No more 45%. The top rate of tax will be 40%. Notwithstanding the fact, of course, they still have that personal allowance clawback when you get to 100, and you've got that marginal 60% for the next 25 grand. I've done separate videos on that. But basically that higher rate, when you get to 150 grand, 45p in the pound tax, boom, that's coming straight down to 40p. So that again is great news. Now then, so much going on. Investment zones. Now we've seen things like this before. The badged up enterprise zones, business development areas, but generally it's a good thing. It's to invigorate certain areas in the UK. As the Treasury book says, it's to drive growth and unlock housing. Okay, so I don't know where these places are going to be. They'll presumably be dotted all over the UK. But in terms of the tax breaks, the things that caught my eye, this first one, SBAs, Structural and Buildings Allowance. So if you buy a commercial building, you are actually allowed tax relief on the cost of that commercial building over a generation. It's 3% a year. So over 33 years, you can write down the cost of that commercial building. However, if you buy a commercial building in one of these newly designated investment zone, you write the cost off over just 5 years. 20% straight line relief each year on the cost of that commercial building. So to encourage people to go and buy business premises, commercial buildings in these newly designated investment zones. What else? If you set up a business in these zones as well, you have SDLT breaks, and you have national insurance breaks, employers and I, to encourage you to hire staff and grow businesses in these investment zones. So, what else? What else? AIA. Now this is great. So AIA, annual investment allowance, brought in the cap of £1 million. Brought in at the start of the pandemic, really, to encourage businesses to spend all that saved cash that was sat on company balance sheets and business balance sheets throughout the land. Chancellor at the time said, look, I'm going to let you spend £1 million on plant and machinery, and that £1 million you can get immediate tax write-off. But when we get to 2023, for 2 years only, we get to 2023, I'm going to drop that million to 250,000. What the new Chancellor announced today says this £1 million limit is permanent. So it will remain at $1 million. So all businesses have got £1 million to invest on plant and machinery and get immediate 100% tax deduction. Absolutely fabulous. So next one, EIS, VCT, income tax breaks. If you're investing in smaller startups or not mature companies, likewise, if you are running one of those and you're trying to attract investment, the government have said in the statement today, in the Treasury book, they are committed to keeping EIS and VCTs, and there are plans to enhance them. So going forward, they will be made generous. No details yet, but they're committed to making those even generous. I mean, there were already great tax breaks on those, so even better in the future. Well, they did announce SEIS. So SEIS, Seed Enterprise Investment Scheme for business angels. If you want to put money into a brand new startup, it's very risky, but the quid pro quo is the government said we'll give you 50% tax relief. You put in 100,000 into a brand new company, 50 grand of that comes off your income tax bill. Now, what they announced today was that the amounts that such small businesses can attract under this scheme have gone up from 150,000 to 250,000. So if you've got a brand new business and you're looking for business angels, the maximum that you could have got under the SEIS was 150. From today, it's gone up to 250 grand. So great for if you have one of these businesses, you're looking to get it off the ground, you want business angels, all of a sudden it's got a lot more attractive. Next one, CSOPs, company share option plans. Announced today they'll be more generous. So 30,000 was how much you could give in these share options. And I've done separate videos on what CSOPs are and how the mechanisms of how they work. But basically that is going to double from 30 grand to 60,000. So encouraging share options to get the workforce motivated in UK PLC. Next one, R&D. So research and development. No new specific rules or regulations or changes announced today, other than the fact that the government is committed to continuing with the review of research and development, and reminding everyone that they've expanded it in the last year or so anyway to include cloud computing and pure mathematics as well. So things in the past that wouldn't have qualified for R&D do now qualify for R&D, specifically cloud related. And government confirming today committed to making the availability more wider and reviewing that relief, which is great news. Next one, abolish the OTS. Interesting. So this was, I think it was George Osborne, 2010, there or thereabouts. He said, I'm going to set up a separate body called the OTS, the Office of Tax Simplification, to basically be an independent body to give advice to the government on areas of the tax code that are too complicated. How can we make the tax code simpler? Because the tax code in Britain is probably one of the most complicated in the world. It's about 27,000 pages or whatever it is. And over the years, the last decade or so, the OTS have made recommendations. Government has said, yeah, we'll take on board some of those and binned off some of the others. Now, the Chancellor has scrapped that. We may think, well, that's not a good idea. But what he's done, he said, look, we are committed to making tax simpler, and to show our commitment, we're going to bin off this independent third party and instead embed that responsibility within the Treasury and HMRC itself. So a separate team within the mechanisms of government to look at this and say, how do we make the tax code simpler? Again, that's a great idea. Finally, IR35. IR35, off payroll working. Contractors have their own company working for clients, but the rules changed a couple of years ago where the sort of burden of proof, if you will, on getting it wrong lay with the customer. So if you're a business and you've got someone working for you and they have got their employment status wrong and they're not really self-employed, you as the engager would get penalized. It was up to you. So what happened was, because of these rule changes a few years ago, thousands and thousands of businesses told these contractors, they said, look, you come in, we don't want the risk. We don't want the risk, so you will have to be an employee. So they became employees, which just drives up the tax burden. More employers, NI, everything else. So the government basically today said, we're going to repeal those rules and we're going to bring back the responsibility to get the self-employed status right with the worker, not the end client, which is great. So then the end client hasn't got that risk that if the workers got it wrong, that they're going to get lumbered for the tax. The risk is on the worker, like it was before. If the worker is not generally self-employed, then they will have to pay the extra tax, not the end client. So that again, that's a good thing. Overall, I'm really pleased with this budget, or growth plan, as you want to call it. But yes, it's a budget in everything but name. I think there's a lot of interesting things here. I mean, it was absolutely jam-packed, and I will be doing follow-up videos on a lot of these subjects. So yes, I think that's a pro-business, low-tax budget, and I think that's it's a very good thing indeed. So, and hopefully you agree with me. Please do leave your comments below. If you like this video, please do subscribe, and as always, I'll see you soon.